Right now is Lebenthal Global Advisors President Dominick Tavella. Also joining the conversation all morning long this morning is pollster and the president of Mislansky and Partners, the author of Persuasion, Lee Carter, and IWF senior policy analyst Patrice Leonwuka. Great to see everybody this morning. Thank you so much for being here. Dominick, kicking it off with you. Your thoughts on this morning as we see another record hit yesterday for markets, but this morning a bit of a pullback. Some worries continuing on inflation. What do you think drives markets for the next year?
Well, look, Maria, we've had 6 weeks now this year, and the S&P is up just slightly less than 5%. So it's quite normal, I think, for just everybody to kind of pull back, take a pause, start to digest some of the data that we've been getting. And the data has been particularly good. We've had 75% of the S&P companies report. 80% of those companies reported better than expected earnings per share and almost 80% better revenue. So admittedly, the analysts had set bar pretty low, easy for them to jump over, but still a big chunk of the S&P 500 that reported better numbers than we expected. So I think it's quite normal here for us to take a deep breath, look at future data that's coming in literally today, and try to make some decisions going forward.
So are you hearing the guidance that you would expect now that we're sort of on the other end of the coronavirus? We're seeing some areas adapting to it. Do you get a little more conviction from CEOs? Did you hear more conviction this earnings period?
I think so, and that's part of the positive. One of the reasons why the markets have done as well as they have. Over the last year, CEOs didn't even want to comment on what their future prospects. We're seeing analysts right now talking about quarter over quarter double-digit rise in earnings and revenue. So I've described it in the past as a dimmer switch. As the light comes on, the economy opens up. Again, it's going to take us a little bit more time, but you see the total number of vaccines now that are out there. I think the last number I heard was over 50 million vaccinations that have gone out in people's arms. So this will incrementally get better, and I think springtime, really, we have something to look forward to.
Yeah, it's nice to see a little more clarity, that's for sure. Let's talk inflation and whether or not you've got clarity there. Kraft, Heinz, and Conagra brands saying that they may choose to raise prices this year on some products that use wheat, sugar, other commodities that are becoming more expensive due to high demand. People are spending more time at home cooking, and they're stockpiling some areas. And we see real moves in food prices. Do you worry about inflation?
In the short term, no. That's the stay-at-home trade. People staying at home, cooking, baking, so wheat and sugar. And look at the construction industry, Maria. The cost of lumber is over the top. Steel. I have clients in the construction business that tell me some of their costs have gone up 20, 30, 40%. And when you mentioned oil in your earlier comment, gasoline prices are going to be higher, but that's isolated to very specific events, and I think that will ease. On the other hand, when the consumer finally can get out the door and actually start spending, there's going to be a lot of money out there and a lot of demand, and the economy won't have geared up yet. So short term, some of these minor things will affect inflation, but I don't expect it to be dramatic. Longer term, March, April, certainly, we're going to see some big jumps. I have some fear later on in the year.
What does that mean for earnings? We've got a number of results from travel, restaurant, other consumer-related names expected this week. Hilton later today. Walmart is tomorrow. Dominick, what is your reaction to the recent earnings period, and what do you expect out of some of these bigger names like Walmart coming out tomorrow?
So if you want to know what's going on in the economy, Walmart is your leading economic indicator. And I saw an interesting comment from Brian Moynihan from Bank of America. The average person out there got that check from the last part of the Trump administration, and he mentioned that a significant amount of that money was still sitting in bank accounts. So there's two things there. One is the consumer past the fear factor and comfortable in spending that money, comfortable in knowing that they're going to have a job later on in the year, and do they really believe that the economy is going to recover? So at the end of the day, if they feel good, they're going to spend the money. If they don't feel good, they're not. And I think we're on the borderline right now. So again, short term, the retail sales numbers today should be higher, but I don't know if they're really going to be exciting numbers. As the economy opens up, I think people feel better. That number should dramatically increase. Remember, December's number was negative.
It sounds like you're invested and want to buy stocks here, Dominic. Is that right?
We've been buying all year. I probably have had the least amount of cash in our portfolios that I've had in the last 3 to 6 months. We've been incrementally buying opportunistically. And I think I mentioned in my notes where we added to the financial sector. At the most recent pullback, we thought that was a screaming buy. And our mid-cap exposure has just done incredibly well. You know, mid-caps and small caps year to date have done fantastic. We're trimming a little profits there, using that to buy things that have not done as well.
All right, we will leave it there. Dominic, great to catch up with you. We'll see you soon. Thank you, sir.
Thank you, Maria.